With many people today concerned about central bank money printing, inflation, economic crisis, and preserving one's wealth, there could be no better time than to be purchasing gold right now. Gold typically goes from shining bright to shining even brighter. To illustrate this, let's have a look at this chart that looks at the purchasing power of the US dollar relative to gold since 1970. You can see here in black the purchasing power of the US dollar over time. Slowly and steadily it keeps dropping, whereas gold, though volatile, keeps going in the opposite direction. They are inversely proportional. You can see the silver price here in orange has also been a great wealth preserver, essentially following the gold price in blue, but just in a more volatile way. Western civilization has never stopped attributing value to this precious yellow metal, and it wouldn't be too much of a stretch to extrapolate that trend going forward. Even if you aren't interested in gold right now, I suspect that you will be. The window of opportunity is still here for now, if you wish to take advantage. Now, over the ages, precious metals have not changed, but what has changed is the way that we can purchase them and the way that we can store them. Today, I'll cover 4 ways in which we can do this. I'll look at the pros and the cons of each, and then this should help us to be able to decide how to best maximize our returns, diversify our risk, and benefit from the convenience. To begin with, let's have a look at our first way that the majority of people purchase gold and silver, and that is in physical form where they store it themselves, usually at home. Let's have a look at the pros and cons of this method. So what are some of the benefits of holding physical gold and silver? Well, you would directly own a permanent store of value. Unlike stocks, bonds, or leveraged real estate, they all have third-party risk associated with them. Having immediate access to at least some of your precious metals can also be helpful in an emergency. Not only can you get the value of your precious metals by weight, but if you have coins that are rare or of limited mintage, this can give you additional value. If stored away safely, they cannot easily be stolen either. They can't be erased or hacked by what goes on the World Wide Web. Also, physical metals are one of the very few assets that offer financial privacy and confidentiality. So what are some of the drawbacks? Well, they may be lost or stolen if not stored away safely. Even a safe can be broken into. Reasonable amounts of silver can also be difficult to store due to its weight and size. However, this is less so the case with gold. If you leave your precious metals to a third-party vault, this can be quite expensive. Some say that precious metals don't give dividends, and this is true. But I'd just like to add here that if you bought gold 5 years ago and sold it today, you would have made about 50% return on your money. That's an average of 10% return per year. Thanks to cryptocurrencies, we can now purchase literal gold and silver by means of a gold or silver token. Now, these tokens are certificates which represent our ownership of that metal, usually on a decentralized blockchain engendering trust. The gold is not held in any one literal location. Usually, it's scattered through various vaults around the world and various refineries around the world too. Therefore, there is no single point of failure, and this can be of benefit. When physical gold is purchased, then a token representing that purchase is created. When physical gold is sold, then that token is burnt. Companies that offer this service are generally regulated and independently audited. Now, these tokens can be bought and sold at the many exchanges that are around the world. You can even redeem those tokens for the underlying metal if you wish, which is a nice thing to be able to do, although this may be at selected dealers only. Now let's have a look at some of the pros and cons of tokenized precious metals. Well, it makes investing in gold and silver at real-time prices so much more accessible, 24 hours a day, 7 days a week. Investors can now buy and sell small or large amounts of gold no matter where they are on the planet. Often, these precious metals are held in numerous jurisdictions around the world, so there's no single point of failure. Transactions can take place in seconds at low cost, with buy-sell spreads as low as 1.5%. And this certainly sorts out the transportability issue with precious metals, as all of this is taken care of for you in the background, and there are no storage fees. So what are the disadvantages? Well, you certainly need an internet connection, and government overreach may hinder access in some jurisdictions. The third way that we can purchase precious metals is by means of a precious metal, either a gold or silver, ETF or electronic traded fund. Now these funds are traded exactly like you would trade a regular company stock on an exchange when it's open during the day. They have a ticker symbol as well as an intraday price. Now these ETFs are designed to give you exposure to the price of the underlying commodity. Now unlike a company stock, the number of shares outstanding on an ETF can change daily. This is due to the creation of new shares or the redemption of existing ones, dependent upon the supply and demand for that ETF. The unit price is backed by the value of the precious metals that are held in storage by trusted custodians. The objective is to give investors an easy way to access gold and silver and give a return that's equal to the spot price. Now let's have a look at the pros and cons of ETFs. They offer a convenient way to purchase, store and insure physical bullion. They are also a cost-effective way to buy and sell bullion on any trading day. They also give you the option of investing in precious metals through your 401k or superannuation plan. This may be particularly useful if you don't have any free capital to do this privately. So what are the disadvantages? Well, typically these funds have not offered any dividends, but I have noticed that some of them in recent years have started to, as much as 5%. Trading costs may be high too if you trade small amounts. Exposure to leverage on some of these ETFs may offer additional risk, so be sure to check what your ETF offers. There's also third-party risks when these institutions who offer these ETFs use third-party custodians. The fourth way to purchase gold and silver is to purchase stocks of a gold or silver mining company. Now when we do this, we're taking part ownership of that company, which includes all its assets. This will include assets that are in the ground, assets that are currently being processed, as well as assets that are in storage. But what are the pros and cons of purchasing a gold and silver mining company? The positive is that the stock price can move much higher with smaller upward moves in the underlying metal price. You're also able to invest in stocks through your 401k or superannuation fund, and this may be helpful if you don't have the free capital to do it privately. What are the drawbacks? Well, the stock price can move much lower with smaller downward moves in the underlying metal price. Also, exposure to natural disasters and geopolitical issues may cause increased volatility or loss of capital. The company could also go bankrupt. We all have unique yet changing circumstances. The investment option that may not suit us today could be the very thing that we're looking for tomorrow. The financial system is looking more fragile than ever before. Investing in gold and silver could be the single safest investment we could ever make. If you found this content valuable, then hit the like button and subscribe for more content like this. Appreciate you watching. See you next time.